All right, welcome back, YouTube. So today we're going to do a live and we're going to discuss some things we were talking about yesterday, kind of see how they panned out over the last 24 hours. So just want to make sure that everyone can hear me, and then we're going to jump right into it. I'm going to put it in the chat as well, just so we can make sure we're on the same page. So if you can't hear me, let me know, but I'm going to go ahead and get started here. So first things first is we talked about yesterday the potential and the parameters here of a swing zone as far as for Dogecoin around 30 to 33 cent, and also the importance of getting confirmation candles before we start to try to identify trends, right? So the biggest thing is right now we did close slightly above the 33 cents mark, and we're opening a new candle. I know it seems to be, well, it's not seems to be, it's red right now, but this is the beginning of a new candle. So before we can identify a trend, it is very important to kind of see what happens with this candle and evaluate price action over the next day. But I will say, and the reason I titled this video is because this here is the upper part of this original gap zone for this trend, right? So if we look at the previous times we were able to break above this fib level, we'll see that whether it was to the downside, to the upside, and again to the upside here. Let me give the dates just in case you want to check for yourself. This is January 3rd, December 19th, and November 11th, right? So no matter if it was to the upside as November 11th and the 3rd, or to the downside, the 19th and January 7th, this was a gap zone, right? So this here is a period where we get that explosive movement either to the upside or to the downside. So right now, obviously, this would be a move to the upside here because we're in the upper part of this original gap zone. So this is why if we can get this confirmation here, it could be a huge indicator for a move here to the upside for Dogecoin. And then obviously once we break above like that 42 cents mark, then we're in a very strong position here to go and retest some of those higher numbers. So obviously the first point of resistance will be around that 39 cents mark, and then as we talk, it'll be around that 42 cents because that was really our even coming off of the initial high when we did our double test here. That was really the Achilles heel for the movement here, was around that 42 cents mark. So somewhat of light resistance at around 39, but that 42 cents is going to be really pivotal, and that's where we're going to start to talk about testing the high for this trend, not the all-time high, but the current trend for right now. So this is also, it kind of aligns with what we were talking about a few weeks ago with the potential here of getting a light cross between the 14 and 72. 14 is the yellow, 72 is the orange here. You kind of get that light cross here. You get that the downward trend. And then we watch this very closely and we wait for the 14 to cross the 72 again. And then obviously that's triggering or signaling a move to the upside here. So we can kind of get the moving averages and the candles here to kind of co-witness with each other, and we're able to kind of get like a time frame for the movement to the upside here, and also within these parameters. So again, a lot lies on the next, I'll say 24 hours to see where this candle closes, because we've seen, I want to point this out here. This is, what is this, December 24th, Christmas Eve. We saw a move very similar to what happened yesterday. We're at the line, the edge of the fib line, but we ended up closing below it. And then we got a couple of days of red and went back to the 72 before we were able to retest. So this is why, if you watched the video from yesterday, I said it's very important to gauge and get that confirmation candle before we start signaling, oh, breakout, we're above the fib line, or we broke out of the zone, it's to the it's to the upside, run to 40 cents or 42 cents, stuff like that. So let's just wait and to get this confirmation candle. A lot rides on that, and then we can start to talk about some of the co-witness signals that we're looking at, and ultimately get an idea of what to expect here, at least on a short time frame. So we can take a look here at Bitcoin. Let's use Binance. So same thing worked out just as we thought. If we watched the video yesterday, we were talking about Bitcoin using the 72-day as support. We literally got like a bounce off of the 72 and we're able to close up. And it's actually trading in the zone just like we thought as well, similar to what Dogecoin is doing. We talked about this a few days ago. This is acting as Dogecoin's 30 to 33 cent range. That is the 14 and 72. So right now, Bitcoin is trading in between those two. But as you can see, these lines are tightening. So we're going to get a definitive answer here relatively soon. So we should see a break either to the upside or to the downside once we start to see the strength of these candles here. The biggest thing that we have here is for Bitcoin to not fall out of that 90,000 range. As long as we're here in 94,000, we're kind of like in that micro trend here. If you're looking at the bigger trend, obviously it's 90 to 100, but that micro one that we talked about yesterday is going to be like that 90 to 95. We have pretty repetitiously been able to grab liquidity from around that 90,000 mark, 91,000 mark, December 31st, December 30th, December 23rd, a big grab on December 20th. We were relatively close on December 5th, even as far back as November 26th, and then even used it as resistance here back in early November to 17th and the 16th. So this is a very important zone here. And if you really want to look at it, it'll be a little bit choppy, but this is what I meant by the strength of the movement, because if you take a look, that's how long this zone has been holding up, right? So we can go back to November. We're talking about almost 2 months, right? We've had some runs in here, don't get me wrong, but this is how long this has been holding up. So this is why this is a very important liquidity zone for Bitcoin, right? So if we did break below this and then we got like a 14 crossing the 72 death cross to kind of co-witness with it, then yeah, at that point we can say, okay, look, we're going back into the 80s. But right now, this is historically over the last 2 months, it's been able to grab liquidity from here. So that's why I said yesterday, it's not a reason to believe that the market is going to have liquidity sucked out of it. Obviously, we use Bitcoin as an indicator. So I don't believe that right now we're in a position to have liquidity flow out of the market and have like that adjustment on different trends or across the board, institutional reallocation of funds, things like that, where we're having the market. That's pretty much when the market does that vacuum, and at least the top 10, they're mirror images of each other as far as for the current trend, especially if there's a sell-off or an upside. And as you guys know, I'm a firm believer, and you should be too, that that's not an institutional or a coincidence. It's not retail or a coincidence. This is big money moving their portfolios and adjusting percentages. So outside of that, I don't see an indication of that happening right now. So this is something we're kind of going to have to watch over the next few days. But I do believe this is going to tighten, and then we will ultimately see which way this is going to break. But again, this has been true for the last 2 months. We've been able to go down to these levels, grab liquidity, and then retest. So the equivalent of a move for Dogecoin, like we were talking about the 40 cents mark, we're going to be looking at around that 102,000 mark for Bitcoin. As you can see here, we've seen this on the 7th and the 6th, and multiple times here in early December. Just that 101, 102,000 mark. It's been here. We've seen even some push downs here going up to around 103, but a lot of these daily candles close within that range. So that's going to be the bigger thing here once we are able to break above that 100,000 mark. That what we do with that 101 to 102 mark is going to determine if we're going up to retest some of those all-time high, not all-time highs, but well, yes, for in Bitcoin's case, all-time highs. In Dogecoin's, it's the cycle high. So what we do with that mark is going to determine the strength of the movement here. And ultimately, obviously, that's going to play a part for Dogecoin, because that's going to determine the amount of capital that's actually flowing into the market overall. And then we can get some projections there. So if Bitcoin breaks first, which typically it will, that's something we're going to be looking for. We're going to be looking for that 100 to 102 mark. So if you're looking kind of like for a triple threat or several co-witnesses for Dogecoin, you're going to be looking at Bitcoin 6 figures. You're going to be looking at the 72-14 cross, and obviously that break here to retesting around that 39 to 42 cent mark. And then once we have those, and we'll take a look at the operating pressure and stuff here in a moment, but we'll see open interest, and then we're going to be able to see that once we get around that 4 billion mark, we'll have a lot of signals here indicating that we're going to go retest the cycle high here for Doge. So let's go take a look here at coin market, and then we'll take a look here and kind of see some of the things that's happening behind the scenes. So you should be able to see coin market cap up on the screen now. Still hovering around that neutral mark in the fear and greed index. Slightly up today to 3.31 trillion, 0.57% increase. And this is where we're starting to, especially for XRP, you're starting to see that out of the overall coins, most of them are the trends here in the last 7 days have been relatively identical, but now you're seeing an outlier here. So this is what I meant by divergence from the current trend, or having that divergence from institutional allocation of funds. You'll see that when you have this divergence, you'll kind of see that something else is going on here. So you'll see that the patterns here, especially the top 10, they're relatively similar, right? They sell off and decline same time across the board here. It's highly unlikely that a retail investor holds the top 10 unless they're playing the top 10 like the S&P. But you'll see that the trends are mimicking each other, like mirror images almost, right? But you'll see a divergence here with XRP. So when you see these here, and this can happen with Dogecoin. This happened last time with Dogecoin, when you have the retail sector or a large movement, or a whale comes in and he generates a lot of excitement around it, you'll see a big push, and you'll see a rush of capital into these particular assets. So this is something to watch here, and maybe I'll chart this on my video later today or tomorrow, and we can take a look to see if we're crossing any important zones, because you can kind of see that this can pump to these levels here, attract a bunch of people in, and then it's something we talked about like with Dogecoin last night. You have to be careful that this isn't like a swing trader or something like that that can literally just be pushing in between zones because it hit a pivotal point and is looking to pretty much make a quick cash grab. So something to watch here. I think I'll chart this with Doge a little later so we can kind of take a look at it. But overall, Doge 1 hour 0.95, 24 up 1.88, and the 7-day down 13.88%. Right there with Solana coming at number 7. Bitcoin as well. So for the most part, outside of, I want to say XRP is the only one that's out. Yeah, so that divergence is the only one that gave XRP the green light here for the last 7 days percentage. And also, I would say in the last 24 hours, that large, this incline here is what played a big part in this 24-hour percentage here as well. But Doge and let's say crypto, let's see. I'm going to count BNB, but so Ethereum, XRP, and Doge and Cardano are the ones that are up in the last 24-hour period. So outside of the XRP, which we're going to get into in my next video, I'm going to chart those two just so we can kind of see what's going on. We'll see if it's in its zone or if we've got some traders in there. Dominance here, Bitcoin 56.53%. Like we said here, we're looking for that 100 to 102 mark. So definitely a break above 95 so we can get a big run. And then we'll see how that kind of transpires into some of the other coins here. Let's go to, I want to take a look here to look at liquidations here for Doge. One sec. So let's take a look here at liquidations. So liquidations 24 hours, 4.7 total, long 1.7 to short liquidations 3. This is, and just so you know which exchanges this is holding, for the most part, it's going to be Binance and Bybit, not all inclusive, but giving you a strong idea of the trends here for the different exchanges and the information coming out. So you'll see that you're pretty much looking at about double the short liquidations compared to long coming in. So nothing abnormal from what we're expected here. Long liquidations actually for the last day are actually creeping up, because if you guys remember, for the most part, we normally remain somewhere between 74 to 75% long to short um, ratios here. But as you can see, we're actually creeping up. And I think this is kind of poisoning us for that potential run to around 40 cents. You'll see that we're actually inching towards 77% long compared to 23% short. So this is something we haven't seen in quite some time here. For those of you just listening, looking at the 5 minute, the 30, the 1 hour, the 4 hour, and the 1 day. 5 minutes 76.23 to 23.77, 30 minutes 76.28 to 23.73, 1 hour 76.22 to 23.78. These are percentages, by the way. 4 hour 76.22 to 23.78, and the 1 day 76.22 to 23.78. So we're seeing the dominance here of the longs versus short actually increasing. So this is something that we're going to have to monitor here very closely, because once we start getting to around like that 78, 79% dominance here, we are, I want to say, not going parabolic, but it's a strong, it's like a freight train here to the upside. So it's one of the things that we kind of monitor here, because even though it just kind of seems like it's only like 3% or 4%, but it makes a big difference here in gauging the movement, whether that's to the upside or downside. Even though when you have shorts here, and it'll just be like 26% compared to like a 74. You're like, oh, what's the big difference here? But at 26%, we're seeing kind of like more of like that battle, and the even possibly some red days here. So that few percentage kind of overturns here, and it can make a big difference here when it comes to gauging the market here. Again, with open interest, like we were talking about with some of those higher numbers here, I would like to see it at once we're challenging this cycle high, we're certainly like to see it around like 4 billion or so. But obviously, overall, we had that big green day yesterday, starting out red today. We'll see where that candle closes, but up 1.78% in the last 24 hours. And again, this is not all inclusive, but some of the major exchanges: Binance, Bybit, almost $1 billion in for Binance, and a little over $500 million on Bybit. So 1.8 billion in total when you're adding up OKX and some of these smaller ones. I want to go down. Let's see here. So yeah, 1.83 billion right now. So what I'm looking at is, if we, let's go back to the 3 months. So this is what I meant by that 4 billion mark. So you can take a look here. If you're looking at like December or even back in like November, you're looking at some of those higher numbers. We really start to get those big runs and those big pushes in liquidity coming into the market, specifically for Dogecoin, when we are looking at 3 billion plus, right? 4 billion is obviously going to put us into perspective here to retest some of those bigger numbers here. But once we get to 3 billion, we can kind of add that to some of those indicators that we were talking about earlier that we use to co-witness with each other to help us identify the trend and also signal the strength of the movement, right? Because similar to those charts that we're using on coin market cap, and we're waiting for like those divergences, we're looking for the breakdown, or to see like a divergence, so we can say, okay, well, this is possibly a breakdown, or it's indicating a sell-off. But as long as all of these things are co-witnessing with each other, we can get an idea of trend. They'll typically give you an idea to say, okay, well, this is going up, or I'm expecting a move here to the upside. So what we do next with this candle is going to be very telling going forward. So that's why I wanted to wait with this current candle here for Dogecoin. So let's go back. Excuse me. Go back to the charts here. You should be back on Trading View. Should be seeing Dogecoin right now. Just making sure everything transferred. Yep. So what I mean is this current candle, I'm going to zoom in right here, right? So this current candle for today, we just opened it up. The one that we had yesterday did come up and retest that 14, break us out of that fib level. So this is what I mean by waiting. For those of you who just kind of tuned in, this is going to be our indicator, our confirmation candle, our make us a believer candle here and kind of give us an idea. And that kind of puts us within this gap zone. Just doing a brief recap here that we've seen here about 4 times before this top level of the gap zone. So this will ultimately put us into position here to kind of hit like that 39 cents, that 40 cents range. And then obviously the Achilles heel, which was the David and Goliath battle here, was around that 42 cents mark. And slaying that beast will put us into a perspective to retest some of those higher levels here at around like that 48 cents, that 50 cents mark. And then after that, we can move on to some bigger macro chart and time frames to see like the next moves here. So that is my update overall. I wanted to do this live here. Let's take some questions here if you have. Let's see. I appreciate all the comments, guys. I haven't been looking at the comment section. I just was, flipping screens on the other side. But if you have not, please consider subscribing to the channel here and liking the video and sharing it. We're going to get into the interesting part of the market here. So you're going to be seeing some more frequent updates from me compared to when it's slower and it's boring. I try not to put out, I want to say meaningless videos, but I want to just make sure that I'm covering important things here in the market. So just make sure that you're doing that and keeping up with the chart action, macro events. We're going to see a lot of macro events with the new presidency, the new economic reports that are coming out, inflation reports. There's going to be a lot of macro events that we can expect to see in the first 2 quarters. And this is going to play a part in crypto for this cycle and the next cycle, because if we get the right crypto implementation, we may not see, I want to say it's going to eliminate crypto winters, but we may not see as steep of a decline, right? Those really big sell-off percentages. So keep that in mind going forward. Again, appreciate all of you guys. Subscribe to the channel if you want to hear more, and I will see you guys in the next one.